Alright, on gold, I took a trade last week on Wednesday, and I want to break down my entire narrative for you guys on why I took that trade, why it worked, in my opinion, why it worked, and give you guys something to just watch for when it comes to fair value gaps. So in the past, we had this daily imbalance here, and on this bearish candle, we reached into that imbalance and then expanded lower with a very nice gap, as well as this bearish breaker here. So I'm just going to draw out that imbalance in a different color. All right, there's the imbalance. You can see the breaker is in gray, and we got some really nice follow through past the external liquidity here. I was anticipating price to do the same thing, basically go into this imbalance and then take out external liquidity down here. The previous week we didn't quite get down there, so I was looking for that to complete, but here's what happened. This was Thursday of last week. Going into the week that just passed, we got this bullish candle on Friday the 14th. This is really important. I want to show you guys how I read these imbalances. In the light blue, that's the daily imbalance, right? I personally don't count a fair value gap as being tested until I see a swing point formed inside of it. Let me show you what I mean. You see we have this daily gap here. This gap was not reached into until we had this single candle reach in, but as you can see, the next candle is all the way down here, so that gives me a swing high out of this gap, right? So you have a high here, higher high here, lesser high way down here, right? That's a swing high. Okay, sometimes you'll see these gaps will just keep marching higher. So like this, you see this is where the daily gap starts, down here. This is the first candle that goes into the gap, right? You can see the high on that. And then this is the second candle that goes higher into the gap. I don't count this as, this right here, I don't count this as a complete test of an imbalance. I need to see some type of swing point in here so I can form new liquidity if this gap fails, okay? So when I saw that this bearish candle formed right here, this gave me a swing high. Now I can look at this area and say, okay, this breaker block and this gap have been tested, right? So if this gap was to fail, I know where I want to trade to, okay? So after this gap was tested and we attempted to follow through lower, as you can see, we didn't get that follow through, right? Something happened on the lower time frame that reversed price higher. But before I show you that, look at this right here. So here's the narrative. We have an overlapping PD array, which is extremely powerful. We go into that overlapping PD array, but we don't follow through lower, right? So we go in, no follow through to external liquidity. Instead, we get a bullish close above our bearish close. So this is a change in state of delivery, right? So we're no longer going down. This to me, these two candles to me confirm that we want to go higher because we had a chance to go lower. We had a chance to deliver to this level. Now, before I go any further, I'll show you that on the 4 hour, right? On the 4 hour, you can see we had a 4 hour swing low that previously offered fair value to this gap. Price came down, swept that low, and then pushed higher, giving us that daily change in state of delivery. All right, so this line right here is a daily level right there. Okay, so back on the daily, we have a failed delivery to the downside with new change in state of delivery to the upside. So whenever we have a gap that fails, what becomes the drawn liquidity? It becomes that swing high. In this case, swing high right here. All right, so at this point, going into the week that just passed, I am looking for longs above this level. I'm looking to take longs to that level. Okay, so on the 4 hour, here's my draw on liquidity, right? And my trade came in on Wednesday. This is still Friday of the previous week, so let's just look at some price action here. So we come back into this gap right here. Price goes a little lower, but it's taking out a 4 hour low. So I'm watching this. All right, going into Monday, we come back for this low. After sweeping this low, look at what happens. We get another change in state of delivery, right? So here's a new 4-hour level, very similar to the one on the daily. My target is still the same, so I'm here, looking at it here. And this is Tuesday, 2 p.m. So let's see what happens Wednesday. Okay. Wednesday, I'm watching this to hold. I want to see this down close candle support price. This is when I drop down to the 1 hour. And I notice this low is intact. I do not expect price to go below this low. Okay. I want to see all of these down close candles to the left support price, as well as this one right here. So I'm anticipating price to be held in this area. Okay. Price makes a swing low going into New York. Right there, price breaks that swing low and pushes up. This is when I started looking for entries. Okay. So I want to show you what I found on the 15. On the 15 minute, I'm getting gaps going to the upside. And right here, I had a bit of a dilemma, right? So I have 1, 2, 3 gaps, right? Now, whenever I have this situation, I personally try to blend these things together and try to find just one big gap. So I didn't have it on the 1 hour. So what I ended up doing was going to the 30 minute. And the only time I use the 30 minute is to do this. I do not use the 30 minute for anything else. On the 30, I found one big gap here. And then I also went to the 5 minute to see if I could find some confluence. And this is what I found was really interesting. If you look at this price run, all of this, there are gaps in here, but there's one that really sticks out to me, and it was this one. This gap sticks out to me because it's bigger than the other ones. Like the size, it just seems to be like an outlier in all the other little gaps that are in here. So what I did was I ended up setting my limit order on that gap, right? And you can see it's also inside the 30 minute, so that's good. So if I go back to the 30, you can see my order is inside of the 30 minute gap, but right on that 5 minute. All right, I'll show you that one more time. Right there is where I had my limit. Right there. So going back out to the 1 hour. All right, this entry comes after the 1 hour liquidity grab at New York. On Wednesday, I'm anticipating this down close candle to support price, as well as this low from the 4 hour to hold. I want to see this hold, as well as all of these down close candles that created that daily change in the state of delivery to hold. There's a lot of support here. All right, so if I do this and I make this a daily level, we'll change the color to red. We can use blue. If I go to the daily, okay, you can't really see it here, but this is actually the 4 hour. Yeah, go back to the 4 hour. Sorry. Yeah, this right here. So this is not the daily, this is the 4 hour. I'm looking for all of this to hold price, support price, and then that level in here, support price. Okay. My target becomes that daily high that was inside of the daily gap. Let me show you that one more time. The swing high, the only swing high that came into the gap first. This is why I need swing points to form in order to call an imbalance or a PD array tested. I need some type of swing point to form, right? Now you can see we have two in here, but my focus is the one that came in here first, this one. Okay, so that becomes my target. Now the reason why my position tool is so much higher is I was thinking about what other liquidity pools might price go for in the event that we do break this high. and I started on the 1 hour. Okay. So going back to the 1 hour, just gonna clean this up. So we know this is the swing high that was inside of the daily, right? But looking left, we can see that we had a pocket of liquidity right here on the 1 hour. That was already hit by this swing high. What's above that is we have a new imbalance that price could go for, since this one has already been taken, right? So when I looked at this, I was met with a massive sell side imbalance, right? There's no way I'm gonna hold throughout all of this. There's just no guarantee that this entire thing is gonna be filled. So I dropped to the 15. On the 15, it looked a lot different. Okay. Here I have pockets of liquidity that I can target. There's this one, and then there's a bigger one here. I chose to go for the smaller one right here. So if I draw that out, and I'll drag this over. All right, so you can see the difference. All right, let me just go to the 1 hour. You can see the difference in distance. You can see the difference in distance between the daily external high and that 15-minute pocket of liquidity. All right. The moment I was in this trade, it was just set it and forget it. I did not manage it. I just left it for both targets to be hit, and this was the outcome. Just gonna pause it here. I'm just gonna drop down to the 15, show you the price action. Okay, price hits the first level. Before hitting that 15-minute pocket of liquidity, we get a massive pullback. All right. At this point, I remember I had a couple alarms go off and I was a little nervous, but when I went to the 1 hour, what I saw was price formed a new buy side imbalance, and we took out the daily high, right? But coming down, we ended up getting 2 bearish fair value gaps. That's quite scary when you're in a trade like this. But this is why you have to look at your other time frames and make sure your order flow is still intact. All of the order flow that I was saying that I needed to hold was still intact. All of those down close candles, all of those liquidity grabs and high resistance liquidity runs were still holding. It was just this area that was giving me a little bit of a scare. But if I go to the 4 hour, you can see it was just a 4 hour pulling back into a fair value gap here. The important thing to understand is this is the one that I needed to hold. Like if this didn't hold, then I would have lost this trade entirely. But this gap ended up taking off, giving me what? That swing point that I need to see, leaving an imbalance. All right. We ended up hitting that 15-minute pocket of liquidity. We did go higher, but I chose to get out here. And I will put that I'll put that trade on screen. I did not record because it was an overnight trade, but that's how I trade daily and weekly fair value gaps that do not hold.